Sticking with news from Africa, the Development Bank of Rwanda has launched its second sustainability-linked bond on the Rwanda Stock Exchange. The bond supports the bank's commitment to mainstreaming environmental, social and governance for partner financial institutions, increasing women-led business loans and financing affordable housing. The bond aligns with Rwanda's sustainable economic development objectives. Now, RMB was involved in making sure this transaction goes through, acting as a joint manager, and joining me to unpack the role it plays is Beth Rivett-Carnac, who is part of the sustainable finance team at RMB. Thank you for your time, Beth. Now, lay the table for us on the pillars and structure of BRD's bond issuance.
Sure. Thanks very much for having us. So this was BRD's second sustainability-linked bond. And a sustainability-linked bond is effectively a debt instrument that links financial or structural characteristics to the issuer's sustainability strategy. So in this instance, as you correctly identified, there were three KPIs that BRD has identified linked to financing for women-led businesses, ESMS implementation at participating financial institutions, and growth in affordable housing loans, which are all sort of material focus areas for BRD in its sustainability strategy.
Well, let's actually get to RMB's role in this issuance and also the partnerships that were involved in this endeavor as well.
Sure. So I guess the key role of the sustainable finance team from an RMB perspective, which is where I sit, was really to work with BRD to draft its sustainability-linked bond framework. And this is actually something that happened last year in advance of their inaugural SLB issuance. And I think it demonstrates the benefit to clients of really investing time in putting together a robust framework that enables programmatic issuances, because now we've seen the second SLB issuance off the back of that framework. So we work with the client really to ensure that the framework positions the structure of the instrument in alignment with international best practice, but obviously very importantly takes into account the local context in which the issuer operates. So it's very nuanced in terms of making sure that Rwanda's context is appropriately positioned within those international frameworks. We then obviously co-arranged the bond alongside BK Capital, which is a local capital markets advisory business in Rwanda. And also receive support from Bankers Without Boundaries in terms of accessing impact investors from the global north.
Well, talking about investors, I mean, has investor support been broad-based and robust when you look at the local landscape and also internationally?
Yeah, so I think what has been very pleasing to see for BRD is that the level of oversubscription for Series 2 outstripped Series 1. So I think obviously it's a new instrument. BRD was the first national development bank globally to issue an SLB and the first SLB in East Africa. So, you know, the first series really required a lot of investor engagement and education on the underlying product. And obviously seeing greater participation in the second tranche shows that investors are supportive of the sustainability ambitions that BRD is seeking to achieve. There was also an increase in the retail participation in Series 2. I think a lot of the support did come from local and regional investors, although increasingly we are seeing the international investors looking to support these types of sustainability instruments.
Yeah. I mean, also just what does the successful issuance of this bond really underpin about Rwanda's capital markets?
So I think it's an important step in obviously deepening Rwanda's capital markets. When we did the Series 1 bond, it was the first corporate bond issuance in that market in 2023. But I think investors demonstrated strong support for both new corporate issuances as well as new product diversification. And obviously, it's just bringing new innovation into the markets. And, you know, whenever we launch a sustainability instrument in new markets, we are always so pleasantly surprised by how supportive investors are of the thematic and really the appetite to bring more of these types of instruments to the market.
Well, I mean, just talking about appetite, because at the end of the day, they need to get the returns. What do the returns look like? I mean, it's quite interesting to also see, an increase in the retail investor participation as well.
Yeah, so I mean, BRD obviously is closely linked to the Rwanda sovereign and also has a very strong credit rating. So they price broadly in line with the sovereign with a bit of a spread. From a sustainability perspective, the sustainability-linked bond structure effectively incorporates a pricing ratchet mechanism, which incentivizes BRD to achieve its sustainability targets. To the extent it does achieve those targets, there is a step down in pricing, so investors receive a slightly lower yield on the instrument that they would on a vanilla basis. but this is only for the last few periods of the coupon. And I think it really just demonstrates alignment between investors recognizing and receiving pressure from stakeholders to focus both on financial return, but also on impact.
And just as we wrap up the conversation, Beth, how much closer does this bond issuance take BRB to its sustainability targets?
So they've made good progress on their sustainability targets. They have sustainability targets set for 2028. So it's quite a long dated ambition, but I think appropriate for a development bank. Investors were very interested to see the annual progress from the first issuance to the second issuance. So they are making good progress towards achieving those targets. And I think what the instrument does more broadly is also support BRD's ambition to shift away from sort of concessional pools of capital into more commercial lending to fund its ambitious growth objectives.
All right. Well, thank you so much for giving us insights on that, Beth. Much appreciated. That was Beth Rivett-Carnac from RMB.